Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing.
My name is Aaron Edwards with Santos Springs. Today is August 12th, 2025, and we have a USDA report coming out today. Also, the corn market just keeps struggling to rally, but the big question, have we put in a harvest low? I know it's early for a harvest low, but we're going to look at last year. We're going to look at where we're at right now, and is it possible the low's in? Are we going to rally from here? We had a friendly trade on Monday on soybean market, giving up part of it today. So a lot to look at, a lot to cover, and we're going to start with recommendations. Then we're going to go to expectations for the USDA report, then our usual analysis. So let me go ahead and share the screen. We always want to start with that bias towards action. What should farmers be doing? And for this week, no action recommended. That box is checked. No action recommended for this week. I'm going to go ahead and share a little bit of the expectations for the USDA report. So we'll go from there. Let me get this pulled up. All right. Obviously, what I'm going to share is not a full complete of the entire report, a full takeaway for the entire report, but I do want to highlight 3 or 4 big picture items. The first one, let me check that box, is the expected corn yield. This is the one that really jumps off the page, is 184.3. In July, it was 181. I want to make it just a footnote about that expectation. That's not my expectation necessarily, right? I don't really try to guess the numbers on the reports. That's as much as possible. I try to make data-driven recommendations where we have the probabilities in our favor, and based on those probabilities, we match that with each farm to have the best actionable plan possible. USDA reports, trying to guess those numbers. Everything I've seen, that's a coin toss. And even if you get the numbers right, getting the trade right on the other side is also a coin toss. So this is just average market expectations on corn yield. And then I would also point out they're also expecting about almost a half a bushel per acre increase to soybean yields as well, which would put us at, I think, 53.9 bushel per acre. So that's kind of, those are some numbers to watch for. Will it be over or under that when the report is published? Then second bullet point there is expected increase to corn and soybean production. No real big surprise there. If you hold acreage the same and you increase yield, production is going to go up. The third point is actually maybe would seem a little bit friendlier. It's slightly tighter 2024-25 ending stocks. It's kind of that low prices, cure low prices. Demand has been a little friendlier for the most part. But it's not that stock 2024-25 carry out, that ending stock is not coming down much, because when you throw in this bigger crop, the 2025-26 ending stock goes up in the US. I should have written US there. And also US stock goes up. The expectation is that there will also be bigger global stocks as well. So a bit of a bleak outlook there. And then we want to shift over to, just the basic philosophy. We work together, we have a portfolio, a strategy of the needs of your farm. Based on that, we look at seasonals, funds, technical analysis. That gives us the call to action. So if you've been following the recommendations, I don't see a reason to tweak this strategy this week. That's why no action is recommended. Now let's jump into the analysis part. We'll start with soybeans and then we'll go to corn. And let me grab a marker here. Let's see what color we'll get. Let's go with blue. So this is the net position of funds over the last 12 months. When they're at zero, when speculative funds are at zero, that means the total long positions and the total short positions are the same. There's no net effect to markets. That's this line right across here in the middle at zero. Let's see if we can make that straight. There we go. All right. Under that blue line, speculators are net sold, which means their markets are artificially low. And over the green line, over the blue line, like in these green points, markets are artificially high. When they get real exaggerated, like back here, 12, harvest of last year, markets are artificially low, and speculators have oversold the market. We have not had an overbought or oversold soybean market really since about October of last year. Let me mark this out. It's about October of last year. It's been a little bit long and a little bit short, but really nothing to write home about. The bad news from this week is, or I guess I should say last week, speculators, they increased pretty significantly their net short position on soybeans. So speculators, to some extent, they're saying, hey, party's over, let's sell soybeans. This report is generated on Friday, but it considers trade through the previous Tuesday. So this data, there's always a 1 week lag. I'm recording these videos on Tuesday, typically, based on the Friday before report, but that Friday is based on the data from the previous Tuesday. So there's a 1 week lag in this data. And that's an important point, because when we look at, do you think they're going to sell more or buy more? If you think of a 1 week lag, I got to get a marker here. Let me get the marker. If you think of 7 trading sessions, we go back 1, 2, 3, 4, 5, 6, 7. Okay. So this has been the last 7 trading sessions. If you go before that, basically what we're saying is that speculators sold a lot with that move down. And that stands to reason. So the question is, will they continue selling? Will Nick's report have more selling pressure? And that brings us to probably the biggest bar that stands out, and the biggest headline from this week so far. It's, USDA report today. But on Monday's trade, we had, number one, what's called a key reversal. What's a key reversal? In the same trading session, you take out the low, you take out the high, and you close above the high. So we had a key reversal in new crop soybeans. That's good news. And we had kind of the driving force between that friendly trade was Trump's statement, nudging China to buy significantly more soybeans. The question on that front is, will this be something? I guess I should have kept this up a little bit long. There we go. Will this be something that's lasting? Is this a key reversal that's going to take us up higher or not? And so far, yeah, we got a really friendly bar on Monday. Maybe that does mean the bottom's in. We're going to talk about that a little bit more. But as soon as we hit the resistance here, the 20-day moving average, this is the 20-day moving average. I won't trace it perfectly. 20-day moving average. As soon as we got real close to that resistance, we ran out of steam. And in the overnight session today, ahead of the USDA report, it's trading down. So I'm not overly optimistic. Now, if you've been following along, right here, that's basically $10. I've said for some time that the soybean market seems to find decent buying pressure every time we get under $10. And that's been the case for quite some time. We get a 9 in front of beans and sellers don't get very interested. And I'm talking about the Board of Trade price. Sellers don't get very interested. Buyers get a little more antsy. And so I'm not saying that the harvest low is in, but if you look at, we're going to look at corn in a minute, but we're at price levels where buyers do seem pretty willing. And if we did get some follow through on purchases, I'm not saying we get a runaway rally, but a little tighter ending stocks, maybe not quite as many soybeans coming into harvest as what was expected. Prices are kind of low enough maybe to give us some additional demand. Friendly news out of the White House. So I want to hold my breath on it, but maybe we are close to some value areas on soybeans that could be friendly. Now we're going to shift gears over to corn. And corn has been a little bit different than soybeans. Let's get a marker. I think red would work. Red is going to look good here. So at these big old price levels down here, this is where speculators are oversold corn. And up here we had speculators overbought corn. I should even make that in green. Overbought corn, right? That's good news. All right. So we've had kind of bigger swings in the position of speculators on the corn market. And the current position of the corn market, the speculators are oversold enough to step in to, kind of check the box on that indicator and say, hey, they're oversold. Maybe we should look at buying some corn. So we're actually going to talk a little bit. If you've been following the recommendations, we have quite a bit of corn on basis contracts, which is kind of like being long the futures market. Where is the buy? Where will this market turn? Those are a lot of the questions that I think people are asking. Yeah, corn won't go down forever. How soon can we be optimistic? This is a price continuation chart, which means it always takes the nearby. Right now, this would still be showing September corn, but this is just the price of corn in the contract closest to expiration. And I did want to point this out. Let me see if I can get this out of the way. We got some light. If you look at corn, let's look at last year's, and I'm saying harvest low. I know full and well there aren't combines rolling out, they're picking corn, right? But if you look at kind of what was the low last year, it actually came in late August. That would have been on the September contract. But that September contract was pressured. And as soon as it switched to kind of December, we saw price, which would be over here, we saw prices increase and the situation get friendlier. So it's really interesting for me that maybe August is going to be the low point on the corn market again this year. And I think there's a strong case to say seasonality has played out a little bit earlier, and maybe it will play out a little bit earlier. The other thing that is just worth pointing out, which is, you can see it, but I want to emphasize it. If we look at this red line, we actually aren't quite to the lows that we were last year, just from a sheer price standpoint. So one way to think about it is this market could dip down farther, and that's very possible. The other thing is just keep in mind that markets change. I mean, look at what happened from those lows to those highs in February. So we're talking basically over the course of September, October, November, December, January, and well into February. We had an almost 6-month rally. I mean, it didn't go straight up, but it was a pretty strong rally for an extended amount of time in the corn market. I'm not saying that history has to repeat itself, but I definitely don't want customers questioning their livelihood or their existence down here in the dumps. Markets change, right? Markets change, and we need to be mindful of that. We need to, keep our eye on the ball. It's a very hard season, but markets do change. Now we're looking at December, the December contract, and I want to make sure we have a marker up here. Black will work just fine. So we have basis contracts, and I'm assuming you have some basis contracts in this December corn. Bad news is I'm not sure this is done falling. It could come down lower, as we saw from the previous slide. Maybe markets have a little bit more weight in them. I do think we are likely approaching harvest lows. How optimistic can we be? The first thing I would look for, if this market turns around, I would look at that gap getting filled around that 430 mark. And depending on when it happens and what markets are looking like, that might be a price point where we would start. We've moved some on basis. That might be a price point where we would start locking in some of those futures. Not great, nothing to write home about, but we got to take the opportunities as we get them. The other big resistance level that we will have to face is this 200-day moving average. And I think at some point in time we'll get up over that, but those would be the two resistance levels on the way up. So roughly there's a gap at 430. And in the 440s, we don't exactly know. Every day that we trade under it, it comes down. So it depends when we get there, but probably somewhere in the 440s is the 200-day moving average. It depends how quickly we get there. Maybe that'll be lower in time. But again, for this week, no action recommended. Let's let the corn market trade. I'm not sure this market has bottomed out yet. I do think we're probably closer to the harvest lows and price levels. But again, we have a report to get through. We have a few more weeks of what seem to be good forecasted weather to get through. There's a lot of bleak news, so to speak. So we will wrap that section up. Now let's go to the summary, and that'll be it. Okay. Corn, seasonally, it is neither a buy nor a sell. Soybeans, seasonally, neither a buy nor a sell. From a managed money position, the speculators are oversold corn, so that would technically be a buy. In the soybean market, they are sold soybeans, but not oversold, so that's technically neutral. The trend on corn is down. And the trend on beans yesterday at the close was actually up, but in the overnight trade, we are right back to a downtrend on the soybeans. Basis levels across the Corn Belt are struggling, and we are starting to see the typical switch from old crop to new crop basis. Unfortunately, we are likely coming into the season of the year with the weakest basis levels. And we'll only probably see recovering basis levels on the other side of harvest. Monday's trade, following Trump's statement, gave us a key reversal on soybeans, but with no follow through, an overnight trade leading up to the USDA report. The corn market is in a downtrend with little technical hope short term. December corn has a gap near 430, and the 200-day moving average will add additional resistance, likely in the 440 price range. Before we can start challenging these price levels, corn needs to get into an uptrend. Another way to just think about it, in my opinion, right? I'm guessing your crops look pretty good. Most of what I've seen is crops look pretty good. Enjoy a good crop. Take a deep breath on the grain marketing. I'll let you know if we need to do something, but it's not a very good time for grain markets. But the world changes. We don't know the next chapter. Right now, there's piles of corn in Brazil. Those piles will get cleaned up. Right now, there's an amazing crop in the field in the U.S. That crop will get picked, tucked away, sold, and then what? Right now, they're we're picturing that there's not going to be enough demand, but we have low prices. So what if demand picks up? The world changes, expectations change, markets change, prices change. To the extent that it's possible, enjoy your good crops, focus on getting ready for harvest. And I would honestly, and I know I probably shouldn't say this, but if it's going to be good for your peace of mind, just leave grain markets on the back burner a little bit. Don't dwell on them so much that you get in a bad mood. We're in a bad slump for markets, but markets will turn. They always have, and we just need to be ready to take action when that happens. USDA report coming out today. I'm recording it in the morning, so it comes out 11 Central as usual. And have a great rest of your day, great rest of your week.